All right, sales of existing homes plunged by a record 27% in July, down to the lowest level in a decade of record keeping and much worse than the most pessimistic forecasts of economists surveyed by Bloomberg News. Does this indicate that housing is leading the economy back down into a recession? I'm joined to help answer that question by Robert Shiller, professor of economics at Yale University and co-developer of the S&P Case-Shiller Home Price Index. Also joining me is Stan Humphries. He is the chief economist at Zillow.com, one of the most visited U.S. real estate websites. Gentlemen, thanks for joining us. And let me ask you, Bob, first of all, about prices, because I've seen the mention animal spirits a number of times in Wall Street Journal stories talking about this today. Of course, that's the name of your book on the subject. Do you think that we see prices just decay, just fall apart now because of the destruction of animal spirits that this would seem to show?
Well, I think let's not overreact to these latest sales numbers. This is the recording the month after the original deadline for a closing for the tax credit. So it's an anomalous month. But I do think that opinions about the market are weakening, and it may result in another decline in home prices going forward.
Well, it's not just also, Bob, the drop in percentage terms, but also the level we're at. Existing home sales, the lowest level in a decade. I mean, doesn't that concern you?
It concerns me, but look, put it this way. People originally planned their closing around a deadline, which was June 30th. So who is it out there who's closing in July? Well, I guess it's only those people who decided to postpone their original closing because the deadline was extended to September 30th. I think most people didn't do that. So it's really an anomalous. You can't compare this number with the other existing sales numbers. It's just a strange reaction to the government's program.
Stan, what do you think? I mean, you do say that you think these numbers are very concerning. Clearly, the tax credit has something to do with it, but it's still, as I mentioned, a big drop to a very low historical level.
Yeah, I mean, courtesy of the tax credit, I mean, our numbers for the past, 9 months have been bouncing up and down. With the November lapse of the original tax credit, we saw December and January numbers bounce down sharply. But I guess I disagree that they don't tell us something important about the housing market. I think what they do reveal is they give some indication of the level of actual demand that exists in the housing market, absent paying people to buy homes. And apparently that level of demand is quite lower than many analysts expected.
What do you think about prices going forward, Stan? I mean, does this signify a further drop or a decay of home prices from here?
I don't think it's good news for home prices and home values going forward. We've been expecting home values to continue to decline through the latter part of this year before reaching a definitive bottom. But this sharp drop-off in home sales definitely gives us pause even for that forecast, which wasn't particularly rosy to start with. I mean, we are dealing with a pretty large supply-demand imbalance right now, with months of supply being at 12.5 months. We think we've got a lot of sideline sellers who are going to keep coming into the marketplace trying to liquidate their homes, and clearly housing demand is pretty weak.
Quickly, what do you mean by sideline sellers? People that just sort of had their homes on sale just in case they can sort of catch bait?
That's well. These are homeowners who have wanted to try to sell their homes in the past 3 or 4 years and maybe tried. Market conditions weren't conducive for them selling their homes, so they've kept their home off the market. But they are looking for any good news and any signs of stabilization, and then they want to liquidate their house. And that's going to keep, these people are going to trickle into the marketplace and keep supply numbers relatively high. By our second quarter estimates, we think there are about 3.8 million of these people out there, which is substantial given that right now that's about how many homes we sell each year.
Bob, let me get back to the subject of price, because so many people come on this show forecasting a drop of 20%, even 50%. High Score Innovating says 50% price drops are possible here. And, of course, the big-name economists have all said that kind of drop, or even a 20% drop, Alan Greenspan says, would drag us into a double-dip recession. Are you concerned about that possibility, or does it seem too extreme to you?
Well, my firm, MacroMarkets, does a survey of professional forecasters, and our last month survey showed that they were expecting kind of flat prices for the rest of this year, but then to be going up at a couple % a year. So I think these dire forecasts, while possible, and sometimes I'm in that camp, I'm worried about it, they're not the consensus forecast. If it does happen, it will certainly bring the economy down.
What do you think we're going to get as far as government intervention here? And Stan, let me direct this at you. You know, Bill Gross came out today on your side of the country and said that we need more government intervention or continued government intervention in mortgages, or else yields would soar 4%. Is that something to worry about, or do we have it since already 95% of mortgages are backed by the government?
Yeah, I mean, between Fannie, Freddie, and FHA and VA, I mean, you're right. I mean, they're backing roughly, I think, by my estimate, about 97% of mortgages have got a government guarantee, a government backing on them right now, which seems like they're doing as much as they can in terms of in that department. I guess I'm concerned about, I do think the time for more federal stimulus has largely come and passed. I mean, I guess come and gone. I don't think that I think we're going to have to let markets begin to heal themselves, and many markets have started to do that. It's not a pretty process by any stretch of the imagination, but I think what we've shown with these tax credits is that we are very good at moving demand around within the year, but we're not so good at minting new demand. And if we're not going to mint new demand, then I think we're wasting taxpayers' money.
Bob, what do you think about more help from the federal government? I mean, if I were in the administration or in Congress, you're one of the first people I would think of about asking for advice on this. Do you advise people in Washington that we need more stimulus, that they need to get out of the housing market?
Well, stimulus is one thing. The other thing is the Dodd-Frank legislation that just came through, which is an agenda for further government action. Most of what that bill does is set up new agencies, new study commissions, and ask them to figure out what to do. We still haven't decided what we're going to do with Fannie or Freddie. And we still haven't really done fundamental innovation that I think might be necessary to move confidence back and to move the economy into the 21st century. So I think there's a lot for the government to be doing, and we will see a lot of government action in the next 5 years.
All right. Hey, thanks so much for joining us, gentlemen. Robert Shiller there, economics professor at Yale University. Stan Humphries, chief economist at Zillow.com. No doubt a discussion that we will continue to have throughout the next few years, if not forever from now.